Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's stories with you. We're starting off with a fascinating tale that highlights the intersection of technology and the workforce. You've probably heard the promise of AI revolutionizing the way we work, freeing up time for employees and increasing productivity. But is this really the reality on the ground? A recent study by ActiveTrack, a workforce analytics company, analyzed data from over 163,000 employees across 111 organizations and found that AI is actually increasing the average workload of employees. The study showed that AI users spent more time on every measured work category after adopting AI tools, with significant increases in emails sent, chat and messaging, and time spent with business management tools. This raises important questions about the impact of technology on our work lives. Are we simply using AI as an additional productivity layer, rather than a substitute for existing work? We also heard from Amazon corporate employees who shared their experiences with the company's internal push for AI adoption. They reported that the AI tools were often unhelpful and added to their workload, requiring them to dig through mistakes and correct errors. This echoes the findings of the ActiveTrack study and suggests that the promised benefits of AI may not be materializing as expected. As we explore this story further, it's essential to consider the broader implications for businesses, employees, and investors. How will the increasing use of AI tools affect productivity, job satisfaction, and ultimately, the bottom line? We'll be examining these questions and more in the coming segments. For now, let's take a break. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the latest developments in the tech industry, and today we have some significant updates to share with you. First, let's talk about Microsoft. The company has been making headlines recently, and not just because of its innovative products and services. We've seen some high-profile departures, including longtime Xbox chief Phil Spencer and now Rajesh Jha, the head of Experiences Pest Devices, who is retiring after more than 35 years at the company. Jha's departure marks a significant change in Microsoft's leadership, as he oversaw some of the company's most important products and services, including Windows, Office, and Teams. However, it's worth noting that his succession plan has been in the works for a while, and 4 members of his team will be promoted to executive vice president roles, reporting directly to CEO Satya Nadella. Meanwhile, Microsoft has also been making moves in the AI space, with analysts maintaining a consensus buy rating on Nebius stock, a company that has secured significant contracts with Microsoft and Meta platforms. The company is positioning itself for growth in the agentic AI market, which is projected to reach up to $200 billion by the early 2030s. It's also worth mentioning that Jefferies analyst Brent Thill has recently initiated coverage on Microsoft stock, citing its strong position in the cloud computing market and its growing presence in the AI space. However, some analysts have raised concerns about the company's ability to maintain its growth momentum, particularly in light of increased competition from other tech giants. As we consider these developments, it's essential to take a balanced view, weighing both the opportunities and challenges that Microsoft faces. The company's commitment to innovation and its strong leadership team are certainly positives, but the rapidly evolving tech landscape also presents risks and uncertainties. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to bring to your attention 2 significant stories that have been making waves in the financial markets. First, let's talk about Bandhan Financial Services, which is exploring options for a private stake sale or an initial public offering. The company's net profit for the 9-month period is expected to be around 285 rupees crore, significantly higher than the previous year's 104 rupees crore. This development comes as the microfinance industry faces asset quality stress, and investors are keeping a close eye on the sector. On the other hand, we have the escalating tensions in the Middle East, which have led to a surge in oil prices. Brent crude has risen above $100 a barrel, and the International Energy Agency has warned of a potential largest supply disruption in the industry's history. This has significant implications for global markets, as higher oil prices can curb growth and stoke inflation. Now, it's essential to remember that investing is all about navigating uncertainty. As your trusted guide, I always advise you to stay informed but not emotional. It's crucial to consider multiple perspectives and weigh the risks before making any investment decisions. In conclusion, these two stories highlight the complexities of the global economy and the importance of staying vigilant. Whether it's the microfinance sector or geopolitical tensions, investors must be prepared for unexpected twists and turns. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.